right, we should be good to go, buddy. We are going live right now.
Super. At the ding on the tweeter.
What's that?
I got the ding for the live notification. That's pretty sweet. I like
There
that.
you go. Awesome. Cool. We got that figured out.
All right. Well, today is Wednesday, March 15th. It's the day after Pi Day. So what do you do after Pi Day? Do you still eat pie or do you have to switch to cake?
Well, I'm like a dog. I try to stay away from sweets, but the problem is if they're around, like there's no willpower. Like sometimes every once in a while I'll go get a box of donuts like on Saturday morning thinking I'll just have a couple.
Oh,
And
yeah.
by the time noon rolls around, I'm like laying on the couch, 6 donuts gone. Like, why? For the love of God, why, Josh?
Oh, man.
So I try to stay away from it. If it's not in the house, I don't eat it. So
No, that's a good point. But something even sweeter. Let's talk about what's going on in the market today. And
yeah.
you've got some charts pulled, or you're going to pull up some goodies for us to look at. So
Yeah,
tee us off.
what I kind of wanted to do today was just go over a couple tools you can use. And the first one you see on the screen is CoinGecko. And so this is a tool. It's a pretty simple tool you can use to track your Bitcoin and crypto purchases, monitor prices, keep an overview on the market. You'll see here, it'll tell you at the top, the total cryptocurrency market cap is 1.13 trillion. That's good to know. If you want to, you can click on a coin and say click on Bitcoin. It'll give you information, the market cap, 24-hour trading volume, fully diluted, valuation, circulating supply, total supply. So on Bitcoin, you can look, okay, there's 21 million total right now. There's 19 million in circulation. We estimate that 3 or 4 million are lost. So, that gives you a good idea just on some of the tokenomics of some of these things. It'll give you a Bitcoin chart, all kinds of statistics, and you can do this with any coin. The thing I like about CoinGecko is that you can build a portfolio, right? And you can go in and whatever. Hold on just a second. Let's see. You can build a portfolio. I didn't realize I was logged in. Let's see here. Well, anyway, you can build a portfolio and go through and kind of track the prices on a day-to-day basis. They've got an app on your phone. You can go through and look through new coins. It'll show you stuff that hits the market, top gainers and losers. Halo coins up 91% today. That's interesting. Never heard of it. And here's where you get into the depths of, the crypto degeneracy. But like Stacks is a good project. There's a lot of hype around Bitcoin L2s these days. But anyway, I just wanted to give you a quick view of how you can use CoinGecko. The next one is lookintobitcoin.com. And there's a bunch of charts on lookintobitcoin.com that you can kind of help you navigate these markets. One of the ones that people like to talk about a lot is a Pi cycle top indicator. And as you'll see, essentially, let me make sure you can see this. Yeah, you can see it on screen here. That it's done a pretty good job of basically nailing tops. All right, that was a 2017 top. And so every time you get the orange line coming to touch the green line, it's pretty much nailed all the major Bitcoin tops. All right, and so out of everything I've seen, this is pretty much the most accurate. And something to pay attention to. Now you'll notice that the green line and the orange line are getting closer here. As time goes by, this will come back up. But that was one chart I wanted to go over. Ted, did you have any that you like that you use to kind of monitor the markets and give you an idea of where we're at?
I like the CoinGecko. So if you flip back over to CoinGecko for a second, the thing that the thing that I like to, why is this? The question should be, well, why is this interesting? There's two things that I think in the beginning or in the early stages of your crypto journey, it gives you a 20,000 foot view, of the things that are going on. And what I mean by that is I think the CoinGecko folks have done a pretty good job of organizing information with this, like, new coins, the gainers, losers, categories, and then like the lending and borrowing thing is something that is starting to become more and more, it's starting to work its way to the surface, this idea of DeFi or decentralized finance. The reason I'm harping on this particular point is that in my own personal life, for example, when I'm on Facebook as myself, just looking at stuff and doing the things that I do, one of the interesting timing for this is I don't know if it's suspect or if it's good timing or somewhere in between, but I've been seeing a lot of paid ads for content creator / marketer types that are touting decentralized finance. And I think that's interesting because usually in the Facebook ads world, if you see ads more than once or maybe more than twice, either the marketer who's paying for that is an idiot and they don't understand how to manage their money, and eventually very soon after that, you won't see their ads ever again because they ran out of cash. Which I have some experience with this, both like to the upside and to the downside, in terms of running Facebook ad campaigns and understanding how quickly you can, people talk about in crypto, people getting liquidated very quickly. Well, it's not just crypto that will liquidate you. Facebook ads platform will liquidate you very quickly as well, and they'll take your money and they'll be delighted to do it. They will set you up to spend yourself broke if you're not careful. And then they'll look at you like you're the bad guy if your credit card charge doesn't go through for some reason. Anyway, that was a silly tangent, but what I'm trying to communicate here is that this concept of very interesting timing, perhaps, this DeFi concept, the idea of individuals like you and I as participants in the crypto ecosystem, and with access to these decentralized protocols and these different tokens and these different platforms, the lending borrowing thing is, to me, what is one of the biggest threats to the existing banking infrastructure. The current crisis notwithstanding, I just mean if I'm in banking and I'm watching my ability to generate income by lending money to people and charging interest, and I'm watching people take collateral in the form of digital assets and be able to, without a third party like a bank or a financial institution that's a for-profit enterprise, being the middleman or the intermediary to facilitate this exchange of collateral for funds in return to go start a business, buy a house, do whatever. This decentralized finance concept and the ability to do things like staking to earn yield, or to borrow, put up your Bitcoin if you're so bold and you want to borrow in fiat terms against your Bitcoin holdings, and you don't have to have a credit score to do that. I guess technically you do have to have a bank account, but maybe in some cases you don't have to have a bank account because you can stake your Bitcoin and earn Bitcoin in return, and it compounds, or it can compound depending on the structure of the thing. But what I'm trying to, circling this back around to this particular tool, is I think it's very interesting to not only see what the current price is, and for me, I don't necessarily care about the price today, maybe in 10 years or 8 years from now, but being able to start building a portfolio. And so the portfolio function is another one that's really solid here, if you want my opinion, because you can, early days in my trading career at the fund, I was only allowed to paper trade. So what I would do is I would build a watch list and I would build a portfolio, and I used a tool called FinViz. I still use that tool today, but I built a portfolio and I would safely, it's like going skydiving in one of those tubes with the big propeller and the net. You can experience what it's like to free fall without having to get on an airplane and take real risk by jumping out of the airplane with a chute that you didn't pack, kind of thing. So you get to what was valuable about that is over a 2.5 year period, I was able to see different types of cycles and different types of price action play out over longer periods of time, which we know that investing in or making investments, sometimes it's all about just your time preference, and the patient are often rewarded depending on circumstances, et cetera. So being able to build a portfolio and see how it behaves without having to put any real capital at risk is one way to start to get an understanding of how these markets function, because
Well, yeah,
they
and when you look at this stuff every day, this is going to sound strange, but you kind of get a feel for how some of these assets move, and so just paying attention, opening up your portfolio every day, tracking, the projects you're interested in, is a good way to start kind of getting into this game and kind of watching what happens. A lot of times what you'll see in the different cycles is there's narratives built around different niches within the crypto community. And so if you're trading, what you can do is you can kind of follow some of those and see which ones are the strongest, right? And those are the ones you want to hop on and trade, especially if you're trading long. Over a long term, you want to just keep an eye on, you can build a portfolio with all your actual holdings. And I've got like 4 or 5 set up. Some of them are kind of mock portfolios. Some of them are real portfolios. And you can kind of play around with that as well. These are real simple tools to get familiar with, but this is the basics of kind of tracking, your portfolio and your portfolio growth. And then if you want to get, really professional with it, a lot of fund managers will do is if a certain asset in their portfolio gets quote unquote overweight, meaning it's grown so much that it represents too much of the portfolio, you can trim down the portfolio. Say you own Polygon, right? And you want to be 80% Bitcoin, but Polygon rips higher, and now your portfolio is 70% Bitcoin, 30% Polygon. You can trim some of that Polygon position off into Bitcoin, and that way your portfolio stays weighted appropriately, right, to your specifications. But yeah, I mean, there's all kinds of interesting things you can do with this tool. It's free. You can learn about crypto. They've got NFT. They've got different products they can do. I really like coming in here, and one of my things, I like to look at the gainers and losers. That helps me kind of get an idea, because a lot of times you'll have some of these that are, just hot, and, this game is, in crypto, a lot of the times, and you got to watch this, right? Because Halo Coin today might be up 92%, tomorrow might be down, biggest losers, right? A lot of these are pump and dump stuff, but it helps you give you a good idea. And then they've got this, I thought was cool, is the categories. You can go through and look at layer 1 protocols, smart contract platforms, stable coins, exchange-based tokens, centralized exchange, decentralized exchange, meme tokens, NFT, government, zero knowledge, layer 2. I mean, I think this is really cool. Gaming, I mean, I think gaming tokens are going to be big here in the future. I am surprised they don't have quote unquote AI tokens in here yet. I stand corrected. Here they are. CoinGecko has beat me to the punch. So you can click on top, AI coins, and what are these coins doing, like, in relation to AI? Probably not a lot, actually. Probably it's just narrative. But it is fun. People like trading the narratives, and right now AI is a narrative. So, you've got Singularity.net. It's up 20% over the past 7 days. Fetch.ai. Just something to pay attention to, right? Like, it's fun to go through here and kind of get a feel. And then if you click something else, so take Singularity Net, we can go in here, we can click on the page, and AGIX, okay, that token's been going pretty hard, all right? We can click on here, we can get to their, their Twitter, their Facebook, their Telegram, their Bitcoin.talk. We can explore their contracts. Again, you see 2 billion circulating supply, total supply 1,260,000,000 max supply 2 billion. So, that'll help you give you an idea. And another thing too that why we're in here talking about this stuff, a lot of times what people do is they'll look at the market cap. All right, so the Bitcoin market cap is 481 billion right now. And as you go scroll down here, you'll see that it goes down by market cap, right? And so you can get a feel for what a lot of people look for in crypto is good projects with kind of a low market cap, implying that you should be able to, if the token succeeds, make higher percentage gains. Now that's not 100%, right? Like they don't always coincide, but that's something that people will look at when they're evaluating some of this stuff. But you can get all.
Oh,
Go
sorry.
ahead. No.
I was just going to say that, like, I like what you just said. It's a framework. It's a basic framework for starting to learn or make an assumption or use it as a framework to do some evaluation work, to make some assumptions about whether or not it meets your particular investment thesis. Like, I mean, we all have different, whether we know it or not, we all look at the markets and see something. We all look at the same chart and see something different. For example, we all look at the same project and it means something different to us. We all have different levels of understanding across a spectrum that's infinitely wide, perhaps, with regard to what does an AI token mean to you and to somebody off the street, or to me and somebody on the other side of the world. It's a slightly different thing. But what I'm trying to say is that if you use a framework like you just described, by looking at those parameters, it can help. And you do this over time, you can become more skilled, perhaps is one way to say it, at evaluating a project and making a decision whether or not you're interested in pursuing it, either as a trading opportunity for income, or if it's something you want to put into a longer term investment portfolio based on your overall thesis of what you think, or what it is you want to get out of participating in the market in the first place.
No, I think that's really well said. And so, like, here you could go through. I really enjoy doing this because, now I'm looking at layer twos, Polygon, Immutable X, Optimism, and I don't know why on this, Ted, they wouldn't have like STX, right? Like that's a layer two on Bitcoin, or at least that's what.
Yeah, when I search for it, I find it.
Yeah, well, I just looking at the layer two categories, it's interesting. But back to decentralized exchange, so you can pull up here and it'll give you all these decentralized exchange. And basically, what a decentralized exchange is most exchanges that you deal with on a database basis are centralized exchanges, meaning they're like E-Trade or Coinbase, or they are governed by people, right? For real simple terms. And decentralized exchanges are meant to exist as ways to trade assets without centralized parties. There's a few mechanisms people try to use to do this. I think we're still early in DeFi. I think DeFi is, in 5 to 10 years, going to be as common as iPhones are today. I mean, I just think that with everything going on right now, I think the other interesting thing I saw was that the new ChatGPT was able to edit Ethereum smart contracts or read them and find errors. I think that's fantastic for the future of DeFi, because it'll help us eliminate some of these errors that we might miss, or some of these errors that might be brought up by hackers, white hat hackers, black hat hackers. The issue though, when you're dealing in DeFi, especially as you're starting out, all of this stuff is an experiment, and so you just have to be really careful. I'd love to put all my funds in a decentralized exchange and make 7% in Bitcoin or 5% in Bitcoin, but as you saw, and here's a key difference between like a centralized exchange like a Celsius, where you had to loan your Bitcoin to the company in order for them to get a return on the Bitcoin. On a decentralized exchange, you provide your Bitcoin as liquidity, you hold the keys to that Bitcoin, and then when you want it back, you can pull it back, right? Nobody else is supposed to be able to control your assets, right? And so it's forgive me if I'm wrong there, because I don't know for sure that you don't have to give up control of your Bitcoin or Ethereum on, every single decentralized exchange. In theory, that's the only way I would use one for Bitcoin, right? If I held the keys.
Yep.
But there's a lot of really smart people working on this and kind of perfecting the bugs. And like you said earlier, I mean, it's like the holy grail. Why would I loan? Why would I give money to the U.S. government and Treasury bills when, I can't predict what they're going to do with interest rates, right? Like, isn't the whole thing with this supposed to be stable, and we're supposed to be able to predict out in the future, and like, why would I give up control, or not even to myself personally, to my bank that will go out and buy T-bills that have duration problems, right? Now, how many of them did that, right? I don't know. Maybe these three banks were just poorly ran banks, but I for the life of me, like, shouldn't they have boards? Like, banking is like, I'm not saying running a bank is simple, but like, you have a money printer. Like, if you can't figure it out, hire people to make sure you don't screw up. Like, are there boards not doing their jobs? Like, I don't know.
Yeah, I
But
don't know.
back
The
back
irony is
to
that the banks are kind of a black box, even with all the information that is publicly available on the internet today about like what a bank is, how it works, and then how treasury bills work, and then how the Fed works. We still don't. But I think the fundamental issue is that it's a for-profit enterprise. It's a business that people start, and there are shareholders. There are, in some cases, boards of directors, and there are executives, and there are employees, and they have payroll to make, they have bills to pay. They're supposed to be participating in the economy by providing goods and services, meaning lending services and goods in the form of money that they're loaning out to other private citizens and private business, or commercial business. I mean, what I'm trying to say is that these are participants in the economy, just like if you and I opened an Etsy store, and let's say I had a Beanie Baby factory behind me, some equipment that would spit out, dolls to sell, for example. We would be just as susceptible to market conditions as the banks were, except if we were taking our inventory and misappropriating it, like in some cases, sorry to like rake the needle across the record here, is that these banking institutions that are for-profit businesses are run by people, and sometimes those people make poor decisions, and they misappropriate their resources, and they get into financial trouble. Just like if we were producing this Bitcoin hat behind us here, and we misappropriated our inventory and took out a loan from a bank to buy materials, but instead of using all the money to buy materials and run the business, we took it and went on vacation, and then we weren't able to meet the demand of our customer, and our customer went somewhere else and spent their money or something like that, and then we didn't make enough money to cover our expenses, and we weren't able to make our loan payments, we would be in default, and we would be in financial trouble, just like.
Well, and that's the beauty of the promise of DeFi, right? When all these centralized institutions fail, these DeFi contracts and platforms operated flawlessly, right? Like, and so the bright side looking into the future is, the code's going to continue to get better. The platforms are going to get battle tested over time. And, we're not going to have to rely on, centralized third parties to earn a yield on our assets, right? And that's the whole point of DeFi. And I think there's a lot of promise into the future. I think right now we're in the build and break things phase, right? Like, that's, DeFi had its breakout moment in 2020, the summer of 2020, and there's been a lot of exploits and hacks, and I think it's gotten a lot of attention from people that are in the traditional, I guess, banking and government, like, because it's you're dealing with money, right? Like, that's the issue, in the land of the United States. Anybody who's dealing with especially stable coins, I don't think they like stable coins very much, right? So, if they come after stable coins, that might affect DeFi. But again, I'm going to harp on this project that I love, that I've been following for a long time, is ThorChain. And Thorchain is a way to swap assets, on a decentralized exchange one for one. And I think that's unbelievably powerful. I really do. And I don't think the market's really woken up to that yet and the need for that. But say they come after exchanges. How are we going to trade and swap cryptos? Well, we're going to do it on decentralized exchanges, right? And that's part of what's awesome about this is, okay, we are a market. We've decided we want these assets. We decide we want to trade these assets. If the government of one company or country comes in and tries to shut it down, these things will continue to operate in different countries, right? And they'll continue to operate online, and you'll still be able to swap assets, and you'll still be able to, make transactions. So, I think that's something that, everybody that's getting into this should learn about, and maybe not necessarily participate at first, but just take the time to learn about it, understand it, read why it's important. And even I think even Bitcoin maxis will, eventually come around to this idea, because you've got to be able to get Bitcoin somewhere, right? And if there's no centralized exchanges, outside of peer-to-peer transactions, where are you going to get your Bitcoin?
So I want to point out a couple of interesting things, and this is an excellent thread, by the way. So today, I think here's what I'm trying to communicate is that we're still in this early stage with DeFi where like what some people are terrified of what I'm about to explain. Other people don't know that they're going to be terrified of this. But today we still have there's a statistically significant number of people who find comfort in the devil they know, in the fact that if they put something in Bank of America, there's an 800 number that you can call, and you can say, well, I'm a customer and the customer's always right. And even if I'm wrong, you have to serve me, or else I'm going to call an attorney, or I'm going to take my money. I'm going to take my $8 and go somewhere else, or I'm going to take my $8 million or my 800 million and go somewhere else, and whatever. But the thing is that despite all of the issues with centralized entities like banks, regional banks, big commercial banks, private banks, that are run by people who sometimes make mistakes. They either do it intentionally or not. The thing today that still terrifies people is that at least you can call them and scream and yell. Whether it solves anything is not what I'm talking about. They have somebody to call. There's a good saying is that one of the things that gives people comfort or confidence in certain things is that they have one throat to choke, and that's what they like. And I'm talking about people in general, not nerds like us who, have been consuming this information and learning about these things and are willing to try and learn. Anyway, the point I'm trying to get to is that there'll be this moment where one mind at a time, people will wake up and maybe wake up isn't the right word. They will come to the realization that they can, and this is really on the people that are building, again, it's back to people that are building this infrastructure, and the ones that are going to win are the ones that are going to make it really easy for people that don't, like the saying is, I don't want to know how the watch is made. I just want to know what time it is. Like, I don't care how decentralized exchanges work. I just want to be able to put my money to work, or put my wealth, or put my assets to work. I want them to be safe and secure. And the big question is, who the hell can I call when something goes wrong? And that's a big problem today still for the average. Maybe
these AIs will help with that. Maybe you'll have a decentralized exchange with an AI that they can call and yell at.
There you go.
But it sounds stupid, but like, think about it, right? Like, you can send your contract to the AI, and the AI can scan instantly, and it can tell you exactly what happened, and then you can talk to it, right? Like, it sounds dumb, right? It sounds like sci-fi world, but I'm telling you, like, that world is going to exist soon, right?
That's not dumb at all. It's not dumb at all. Here's what I mean. It's like 5 minutes ago, I didn't think of that. So all I thought of was, like, we have this particular perception hurdle to overcome. It's not a brick wall. It's more of a bump in the road, because if as the traditional finance world continues to try and grow and grow and grow, it's going to collapse under its own weight at some point. I mean,
well, and that's what these people don't understand. This technology is going to outpace them so fast Like, we do this every day, right? And it outpaces us, right? And so,
Yeah, by a long shot.
there's going to be tools that are brought up and invented, and they're going to be financial tools, that leverage crypto and AI in a way that, like, look, the problem in DeFi right now is user interface and, like you said, customer support, right? But an AI could solve a lot of that, and it sounds fantastic, right? As I say that out loud, but if you had a smart contract platform that had built trust and that's been evaluated and works, put into a user interface that felt like a comfortable bank, like and again, this would have to be a legitimate project. Like, I'm not trying to spit ideas out there that, like, scammy people can use, but, like, I think that would go a long way in getting people comfortable with, like, make it feel like a bank, right? They shouldn't know that they're using. I mean, it shouldn't. They should know that they're using crypto rails, but they shouldn't know, right? Like, they can use the app without ever knowing that the thing is built on crypto rails. And, like, okay, you deposit your 10 grand of USDC stablecoin and you make 5%. You have no idea that was ever done on crypto rails. If you don't want to, like, it should be disclosed, for participants, but the interface shouldn't be anything to do with, like, crypto and smart contracts and, like, all that stuff. Like, it should just be really, really simple and easy to use. And that's basically what I'm getting at, right? And I think that can be done with smart contract code and AI.
Agreed. And the underlying trust layer, like, that has to be a DNA level ingredient in. And what it's going to take is it's going to take people that are able to think, like, the framework, in my opinion, is for individuals that are thinking less in terms of how are they going to profit from this, but perhaps thinking in terms of, like a legacy mindset. You hear people talk about, leaving something for a legacy, whatever. And what I'm trying to say is that it would, the people that if it resonates with the right kind of people at the deepest levels, they'll put their blood, sweat, and tears and pour their soul into making something that's going to live beyond their time on Earth. And that you could even say that, allegedly Satoshi Nakamoto, sacrificed, he made a huge sacrifice for humanity by building or building the system that we know as Bitcoin, the blockchain, writing the white paper, and then putting it out into the world, and then, quote unquote, walking away, because we don't know who he is and where he is or what. But the point I'm trying to, like, it's an interesting concept to me to think about. If people, like, even with all of the problems that the traditional finance world has and has had for a long time, people still trust to a certain extent, and they put their money there, even if it keeps them up at night, to a certain extent.
Because there's no better option, right? We just need to build a better option.
And that's where I'm going with this.
Free market, right? Capitalism, like, that's that's the answer, and they're going to fight it, but technology is going to provide a better answer.
And I really like this. You rang my bell with this idea. And I see, even as much time as I spend looking and reading and consuming information and trying to stay on the bleeding edge, it still didn't occur to me natively or instinctively that the access that we will have to AI tech to be able to integrate into applications is it's gonna be amazing. I mean, my brain just exploded.
Now the problem is you're gonna have competing AIs, and which one do you trust? Is Google's AI gonna sabotage your smart contract? Is Bing's gonna like, are these different AIs gonna be, like, left or right leaning, right? Are they going to have an agenda, right? Like, I don't know any of that, and I have no way to evaluate that. It's all so new. It certainly seems like some of the things on ChatGPT are geared towards a certain political persuasion, but, like, I don't know that stuff. But that's all stuff to, like, figure out. We'll all figure out that together as we move forward. But it's interesting to think about, right, some of the applications that can be used, and I think finance is one of the first ones. And how is traditional finance going to use AI? They'll probably fire 99% of their workers and automate, the traditional system, which doesn't fix anything. It just helps their bottom line, right? Like, how is crypto going to use AI? Well, you can use it to edit smart contracts. You can build a user interface that feels like a bank and makes people feel comfortable, right? Like, I don't know. It's fun to think about this stuff. And I don't know the technical aspects of it that would make this possible. But there's a lot of smart people that work in this industry that, are tackling these problems every day. And so that's what we kind of do. Like, that's what I do as an investor. I go through, I read about all this stuff. I find projects that I think are interesting, that I think could be, successful. And then you try to find ways to invest in them, and you can invest in them through, different vehicles, right? The cool thing about crypto is, before you'd have to start an angel investment company or a VC investment company. And the difference there is VCs raise money, invest other people's money. Angel investors invest their own money in different projects. You'd have to, get in, pre-IPO. You'd have to do, but with crypto, you can hop in on these tokens, which a lot of them are extremely liquid, and kind of do your own venture investing that way. And I know a lot of people don't look at it that way, don't like that term, don't think it's the same, because they don't believe that tokens will accrue value. I believe it's the opposite, right? Like, in these economies of the internet, right, the tokens will accrue value, but yet to be seen, right? We'll see how that plays out. But I think that's something that's really cool about all this. And that's the fun part about this from crypto too. It's like, a lot of times you don't just sit around and think about number go up. You think about different ways that this technology could be applicable, because I'll tell you, most of crypto is pointless, right? And like, we can go back and forth on which projects we think are important and which ones aren't, but the majority of it is a cash grab, right? And so you have to be able to learn how to separate, which projects are real, which companies are actually building solutions for the real world, what layer ones are actually useful, which ones are, what gaming tokens are actually gaming tokens, what AI tokens actually have some sort of, relevance to AI. And those are things that you just learn over time, and you learn to identify good teams. You learn to identify projects that are building stuff for the real world. And, the nice part about this is that you're playing a years long game, right? And if you're venture investing, right, there's ways to analyze these markets, and there's times to buy and times to sell. And, you're not tied into these companies for 3 to 5 years if you're doing this yourself, right? You can exit the project, and in traditional venture investing, your money's locked up for anywhere from, 3 to 10 years. And with crypto, you have liquidity anytime you want it.
That's right. And that's what changes the game for the every person. And one mind at a time, I keep saying it, people will understand that they have access to this, and it will seem weird and strange and foreign at first, because it doesn't make sense, because we, in our society, and, here in the US and around the world, it's been, well, if you want money, you have to trade your labor and go work a job. And then if you want to buy a house, you have to go to the bank and borrow money because housing is expensive, or, whatever the things that we learn. It's just like, well, that's just how the world is. But the world is literally changing every day of the year, whether we like it or not. And these things are becoming available. And as the individuals learn about these things, they'll start to vote with, not the saying is that people vote with their wallet. And this is going to continue to evolve and change as people will start voting with their crypto wallet for the projects they care about, the tokens they care about, the mechanisms on how they manage and protect and store and grow their wealth. They'll vote. The vote will be cast. And one other thing I wanted to say, real quick, you triggered another thought. You're talking about the number of crypto tokens on the market. Yeah, a lot of them are just cash grabs. But go to a bookstore like Barnes and Noble, or go to Amazon, which started as a bookstore, and look at all of the books, all of the different authors, all of the cash grabs going on. I mean, this is not a new thing. It shouldn't surprise anyone that there are individuals on Earth that try and make a cash grab and some hot new trend that comes along. But the ones that matter float to the top, so to speak, and the rest that are garbage eventually sink into the ether, never to be known about or talked about again. And that's just, it's the same thing, only different, in my opinion.
Well, yeah, and
And
like we've talked about this before, like, get used to the fact that there's tens of thousands and hundreds of thousands of crypto tokens. Like, there's just going to be more into the future. Like, these people that comment on this stuff, they don't understand it. It's just code, right? Anybody can
Mhm.
do this. Like, you can cut and copy code and make your own coin. Like, there's going to be tens and hundreds of thousands of these things in the future, right? And so the key to investing in these things is, taking the time using, and CoinGecko is a simple tool, but I think you can get a lot of great information out of it.
Yeah.
If you go to Uniswap, like, you can go to their Twitter. We've kind of joined their Discord. If you like a project, I would suggest joining their Discord, seeing how active the Discord is, seeing, if there's communication from the people running it. Uh, you know, there's all different kinds of tools you can use within these as you go through. And so, like, you can go through, okay, so great. Uniswap, it gives us the exact tokenomics, advisors, investors. This is something you want to look at. Team, community, the supply schedule. I mean, this is all great information when you're analyzing a project to go through and get an understanding and a feel for. Uh, Another, like we talked about earlier, this look into Bitcoin is great for Bitcoin charts. It's got 200 week moving average heat map, stock to flow model, which I think has basically been debunked. Fear and greed index, important to pay attention to. Golden ratio, Bitcoin rainbow. This is just fun. I think the guy that made it, like, basically said, this is garbage, don't use this. But you
Yeah.
know you can see that it kind of tracks, and from where you have sell zones to buy zones, and we've had a nice long period here to accumulate some cheap Bitcoin historically, right? And so all of these are tools in your toolkit that you can use. We just wanted to give you a quick idea today of some of the things that we use and some of the things that maybe you might look at when you're starting. Because when you're starting all this, it's overwhelming, right? And just, you got to take it one day at a time, one project at a time. Learn CoinGecko, learn to navigate that, learn how to, read these charts. If you go to YouTube, there's a bunch of videos, that'll talk about all these Bitcoin charts that you can learn about and use them to plan your Bitcoin acquisitions, because timing does matter. You can buy $100 of Bitcoin a week when Bitcoin's at 25,000, or $100 a week when Bitcoin's at 100,000, right? Like, long term, it shouldn't change your strategy. But, if you're aware of the cycles and kind of what we're going through, you can, lump sum into Bitcoin at some of these lower prices and do all right. That being said, do your own research. This is not financial advice, never is financial advice. But I wanted to end on one thing. I don't know if you can see this, Ted, but it's a picture of a cat reading the newspaper. And it says, I should put some percentage of my portfolio into the only asset with zero counterparty risk, Bitcoin, just in case. And so it's what we were talking about earlier this week. And it makes a lot of sense given the recent, you know, happenings with these banks that, take some of your risk out of the traditional finance system, put a certain percentage into Bitcoin, right? And measure that counterparty risk, right? Like, don't go crazy. Like we talk about all the time, you don't need to move all your money out of a bank account and buy a Bitcoin. That certainly ends in disaster for 99% of people. But start doing your homework, research it, get a good feel for it, start to understand it, and then you'll understand why it's a good option to take a percentage of your portfolio out of the traditional banking system and put it into Bitcoin. So that's all I had today, Ted. How about you?
Yeah, good stuff. Well, I
Awesome.
learned some things today. Got some new
Well,
ideas.
let's
Super.
get started on our AI DeFi user-friendly interface. We need to hire some coders.
Yep.
So anyway, man. All right, sounds good. We'll see you guys